Hey guys, welcome back to the channel. So, some of the things we talk about is, how to invest, where to invest, but how do you know when you're ready to start investing, right? Like, do you think you're in a good spot, a bad spot? Like, how do you know, right? Because you're feeling like you're starting to get this money thing down, maybe, right? But does that mean it's time to start investing? Well, how do you know if you're ready? Well, if you've been working on your personal finance, you've certainly heard the advice, invest, 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 right? Especially here, right? However, there's some other stuff to think about, right? Your debt, savings, income, spending, just it's hard to get all these things under control and try to figure out, if it's time for you to start investing or not. So, should you be investing while you're also working on other areas of your finance? Like while you're tackling debt, should you invest? While you're trying to save, should you invest? If you're trying to spend money to increase your income, like should you invest? Things like that. Well, if you're curious about when it's the right time to start putting your money to work for you, right? We're gonna go over some of these, you know, we'll call them guidelines, right? Loosely, right? Because I've got some news for you. You could be already investing without really realizing it, right? If you are participating in your job's 401k program, right, you're investing. That money goes into your 401k is used to invest in stocks, bonds, mutual funds, other stuff like that, right? You made these selections when you signed up for it, or maybe you were just auto enrolled, right? And a 401k might not feel like real investing because the money goes into the account pre tax, so you've never even seen it, right? And the contributions are invested in things such as target date funds or equity funds, just not like the new hot ticket item, right? But really, your retirement account is investing. It's tax advantage too, right? So that's gonna mean you don't pay tax on it until years down the line when you retire and start withdrawing funds. That's why it's a good idea to max out your retirement accounts before you start investing in a regular taxable brokerage account, right? Where you'll have to pay taxes on your gains. If you don't have a 401k and still want to invest in a retirement account, you could open up a Roth IRA or a traditional IRA. These are retirement accounts where you get full control over the investments within them. Think of an IRA as an account that can hold all kinds of investments, right? Stocks, bonds, mutual funds, ETFs, REITs, just so many other things, right? You choose what to invest in. Unlike a 401k where the plan administrator gives you a limited set of choices. Roths have an income limit, right? So if you make more than 140,000 per year, you know, you're gonna want to go with a traditional IRA most likely. The tax details are slightly different, right? They use pre-tax money instead of post-tax money, so you'll have to pay taxes on your contributions when you retire. However, both kinds of accounts are a great way to shield your investment while you're working. If you do have a 401k, you can also open an IRA, right? And that gives you additional tax advantaged investment power. Now, another thing, your emergency fund, right? That's the next thing you need to consider, right? Your savings account. Do you have an emergency fund? I really hope yes. We've talked about this before, right? Because an emergency fund is what will save your butt if something happens. Maybe you have a pet that needs surgery or your car breaks down. Stuff happens. An emergency fund helps you cover these unexpected surprises without going into debt. Depending on how stable your job is, try to have, I try to tell people start off with at least 3 months, right? 3 to 6 months is usually the best option, right? And so basically it's like if you lose your job, you could live off your savings for 3 or 6 months, right? Until you find a new one. Many people have been surprised by layoffs, right? You could be doing a great job, your boss loves you, but maybe your company gets bought out and the higher ups decide that your department isn't necessary anymore, right? You got to be ready for that. Even if it seems like such a slim chance, you just think it's never going to happen. If you don't have an emergency fund in place before you start investing, you're risking a lot. I mean, just think about it. The stock market tanks, your investments lose 50% of their value, right? Like, let's say you invest at 10 grand and now it's only worth 5 if you sell it. Your company is struggling in a bad economy and you get fired or laid off, right? Now, you're not only jobless, but you don't have that $10,000 invested anymore. The most you could get is five if you sell your investments, handing you a $5,000 loss right as you start unemployment. So you really should be topping up that emergency fund first, and then you can focus on stuff like investing. Another thing to talk about, you're not carrying a big balance on your debt, right? This is just math. If you're carrying a balance on your credit cards and you're paying 17, 18, 20, 22, 24, 25%, your investments are going to have to do ridiculously well to cover for the money you're losing on interest payments on your debt, right? And that's a tall task, right? The market's too unpredictable. The same goes for any other high interest debt, right? Like a personal loan. If your interest rate exceeds your returns on your investments, and at some point it will, then it doesn't make sense to put money into investments before you pay down your debt. Get that debt paid down, and you'll free up more cash for your investments without feeling pressure to take some risky investments to make up for it, right? So another thing is, you should know your diversification, right? You don't need to sit around trading derivatives, yelling about option swaps and, you know, chasing this, that, or the other on your day trades while remaining glued to your stock app of choice, right? But before you invest, you should be reasonably well informed about the stock market and various kinds of investments and the fees and taxes you should expect, right? About the general current events, financial markets, and economic trends. If you look into hiring a really good financial advisor, right, that can be a shortcut to this kind of investing knowledge. But that's not your only option, right? You can learn a lot about investing on your own, and I mean honestly, it's a good idea to do some of your own learning, right? So you're not as vulnerable to someone else's ideas and opinions, right? So let's start with the basics if you don't have them down yet. Let's talk about the stock market, right? You should look into that. A couple other things you should look into: the difference between stocks, bonds, and other investments, right? The difference between taxable and tax advantaged accounts, right? And then explore some trading strategies, right? Do you want to be an active trader or are you good with passive investing, right? In other words, are you comfortable enough to track prices by the day or hour, jump on deals, and execute trades? Or would you be fine with a set it and forget it long term strategy? Like, you have to know your own personality, time commitment, risk tolerance, and just your general attitude to be able to make that decision. Whether you choose an active approach or passive one, you'll need to know current market conditions, current events, and business basics to understand your trades and reasonable expectations of their performance. The good news is a lot of financial sites can really help you get up to speed on a lot of that stuff, right? So then, another thing is, you've probably set some goals, right? When you hear news stories about crazy big wins in the stock market, it's easy to think, well, that could have been me. Well, before you start investing, you should set some more specific goals than simply just making millions of dollars, right? So, first of all, there's no guarantee you'll make a lot of money. You could get lucky, you pick a stock that goes up 200%, 500%, 1,000%, or you could get unlucky and get one that drops just as much. It's better to set some specific goals, right? Ones you can measure, and then make a plan. After all, you don't control how much a stock appreciates or depreciates, right? You only control your own actions. So, long term goals work pretty good for the stock market, right? Which tends to go up over time, but contains some real heart stopping losses along the way. It's why retirement accounts have such long time horizons. You may see ups and downs in the short term, but after 20, 30, or even 40 or 50 years, it all typically evens out for the positive, leaving you, ahead, pretty far ahead of where you started, right? Um, and you gotta have the fortitude to hold on. If you check in on your investments and you see they dropped, are you gonna have the strength to hang in there, or are you gonna panic and sell? Investing takes some calm, rational behavior, as well as the ability to think clearly in times of adversity. Unlike when you deposit your money in a bank account, investing doesn't come with a guarantee. And it's very easy to let panic get the best of you, especially when it comes to your life savings. So, before you start investing, make sure you exercise that restraint muscle. Practice setting goals and stick to them. Even when things get hard, you'll need to be able to know, or maybe at least be able to figure out, what to do when things don't go the way you hoped they would, right? So, ready to start investing? Well, let's talk about some options. You've paid down your high interest debt, fully funded your emergency fund, you've re-upped your retirement contributions, you've done your research, you're feeling excited and hopeful. Now you're ready to start investing. You have about as many options as there are, stars in the sky, or at least that's how it feels, right? So, really, where should you begin? Well, as we talked about, a little bit earlier, a great way for beginners to start investing is to open a Roth IRA. You can open a Roth at any number of brokerages, including discount brokerages. Let's take an example. E-Trade. You can open an IRA at E-Trade with no minimum account deposit. That means you can focus on getting your account set up and worry about transferring funds later. If that sounds like too much work, you might want to look into using a robo-advisor app like Robinhood, where you can be as active or hands-off an investor as you like. So, let's summarize all this up, right? You'll know when you're ready to start investing, right? Right when you realize you're getting the rest of your financial house in order, you know? Once you've taken care of most of the important stuff, like we said, the debt and the savings and retirement, right? You'll have some wiggle room to put your money to work for you, right? And I know I say retirement in there because I know everyone's like, oh, your retirement account is your investing account. Yeah, but you can have a retirement account and an investing account. Some people might refer to this as like I have my retirement account and then I have my play money account. It's however it's person to person, right? But I really hope you guys get a good understanding or, a good feeling of like, okay, this is what I need to do so I can start investing, right? This is the direction I need to head in. And hopefully if you guys like it, you'll subscribe to the channel, give this video a thumbs up, and until I see you guys in the next video, y'all be safe.